Please subscribe, like, and hit that notification bell. Thanks, guys. All right, guys. This is how it goes. Okay. No. Do-do-do-do. Do 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 do. All right. So what's happening? It's been a while. I haven't done a podcast. I'm going to go through some key charts. I'll keep it brief. I'm going to show you exactly what gold needs to do to break out. I'll show you exactly why that's important for silver. And until these two events happen, you could try to guess about them. You could try, maybe this is the last low. This is how chart trading works, guys. You have patterns. And I'll dive right into it. Here, what you have on your screen, guys, is the gold divided by CPI. So gold adjusted for inflation on the left-hand side. And here on the right-hand side, you have silver adjusted for nothing. Just silver with its chart pattern. And I'm showing you that silver tracks gold's performance versus inflation. So chart trading, super simple. These lines here, and they're not all built equal depending on how long they are, the lines, how many touches they are, on what time frame they are they slanted? The angle of that line matters a lot. All this stuff that chart traders, look, I've watched, I don't know, I've done probably 10, 15,000 hours in this, even more, I don't know how many charts. You get to associate probabilities to these different type of breakouts. And this is the key word, breakout. You need a convincing close. So once these important trend lines morph into existence, 1, 2, 3, with little wicks above, can't get above, a break here on the fourth, that means something. As a chart trader, you see that. You see a 6-year pattern going sideways, down, breaking out. Once you get that convincing monthly candle close here, descending trend line, and here even I could have drawn a horizontal one. It's just beautiful, higher lows. This thing has got the whole thing. It has here rising trend line, false breakdown, goes back into formation, and then shoots upwards. That is how you flip headwinds into tailwinds. As long as you're below this line, you have headwinds. The price is going down. It's below a declining line. It's headwinds. Doesn't mean it can't break out, but you just don't know. You could have bought any moment here since 2013 all the way to 2015, 17. You could have done a whole bunch of things here. But the strong move up to create that reverse symmetry move, you might have seen me do this often. That move that goes as fast up as it went down, and you'll see the angle's practically the same from the peak here all the way into the formation, the base formation. That is enacted after the confirmed breakout. And even there, guys, check it out. It doesn't even mean it's 100% of the time you're going to do this reverse symmetry move. But the odds are of having that reverse symmetry move drastically increase once you get this type of monthly candle close above descending trend line, sideways line. So this is chart trading, guys. It's to make sure you're not hodling into a downtrend, that opportunity cost. You're avoiding that, putting that on the side. All right, so let's get into the fun stuff, guys. That's chart trading. Now, look at this pattern here. Bullish, expanding, descending wedge. Lots of adjectives, but essentially it's increasing volatility. There was probably one here. I could have drawn a bullish, expanding, descending wedge. So the price goes down, and it's volatile, and it vomits, and it goes down. But as soon as it stops going down, and it starts carving in a higher low, I don't know if it's going to be here yet. That's why knife catchers, bottom callers, great for bragging rights, but you still haven't shifted the odds in your favor. Until that starts to go back up and does like it did in 2019 here and starts closing above this descending trend line, the odds are you still have headwinds, more headwinds than tailwinds. So that's a bullish pattern, but you still need to break out of it, right? It's still morphing. Patterns are only patterns once they're confirmed, and the pattern is confirmed when it completes. That's it. All right, silver. This is gold adjusted for inflation, guys. Silver tracks gold's performance versus inflation. Think about that. Silver's chart is practically going to look less good than gold's chart most of the time because it's dependent on gold going up and it's dependent on gold's outperformance of inflation. Double whammy. So it needs gold to do two things. It needs gold to break out on its own chart, and it needs gold to break out versus inflation. So it's tough to play silver. It's fun. You got to time it. And you can only time it properly once you get confirmed breakouts. Look at that. 1, 2, 3, 4, 5. Breakout. That beautiful July 2020 candle. Convincing breakout. Even here above a horizontal breakout line. And gold. And you know that gold broke out a little bit before. And that candle here was telling you that silver was following suit of gold's outperformance versus inflation until it reached its wall here at $28. Then after that, targets reached and it's just moving sideways, mimicking gold's performance versus inflation. And remember, this is a ratio chart, gold versus inflation. A ratio, it's just telling you which is outperforming which, right? This ratio here, gold could be going up versus inflation, while gold and inflation are going down. It's just that gold's going down less fast. But we do know that gold is going up here. The fact that it's outperforming inflation here, it is because gold is going up. So this is very good. And we know that the gold chart is much higher. It's closer to its all-time high than it looks here versus inflation. So this primarily means gold has remained strong while inflation is going up, but it hasn't been outperforming inflation. But as soon as inflation starts going back up, this ratio will start going down unless gold sniffs out that there'll be so much more inflation that gold will go up as inflation is going up, but outperforming it on the way up. So that's it, guys. Look at silver. It's a beautiful trend line here. There's a wall at 28. I could have drawn this more aggressively. And I'm going to show you one bonus chart right before I close this, just to complete the show, to tell you exactly where we are in this. So when gold breaks out and it's getting closer to that descending trend line, silver's probably going to follow again in suit. And the crazy fast reverse signature move, just like gold did it to all-time highs here versus inflation. Look at that. This is the reverse symmetry move that's waiting for silver right above this trend line here. And also, it's going to be right above a critical wall. It's like, it's around the corner. It's there. But you have to let the market decide when it's time, right? I'm repeating myself. Convert those headwinds into tailwinds. A player, a soccer player, professional player, football, basketball, boxing, they're never going to go. They're going to go where it's the easiest way, right? The guy who's running with the ball, the running back, he's not going to go through those big guys. He's going to try to evade them, right? He's going to go where there's a path of least resistance. So always, always wait for that. Here it's congestion, but once you get back above, you're in the clear. All right. All right, guys. Here I have silver versus SPX. So we know we're waiting for gold to break out versus inflation. I could have also talked about gold breaking out versus SPX. But silver tracks better gold versus inflation than gold versus SPX. I've been touting for a while that gold versus SPX is the gateway to the precious metals complex. It is. In a bull era, you want gold to outperform SPX. But silver, once I saw the gold versus inflation chart, it just looks so much like the silver chart that tracks a lot better. All right, daily chart, silver divided by SPX. And I have these lines drawn in here. I could probably zoom out just to show you where we are here. It's not a lot of price action. So here's the downfall, and I'm on the log scale right here. The downfall of silver in a bear market, underperforming SPX, trying to go back up, going down, trying to go back up. I probably have here another critical line. That's a huge base morphing to existence. So just like here, when silver went bonkers in 2020, it was doing a base right here. Went down to a base, broke out, reverse symmetry move, right? All the way back to the other side. Let me just put in my arrow. Look at that beautiful reverse symmetry move. Where's my, here, reverse symmetry move right here. It did a reverse symmetry move. Couldn't break out, hitting that resistance here, morphing into existence. 1, 2, 3. 3 touches. There's even probably a horizontal one on the hard time frames. Here, support, turn resistance, resistance. It's even lower here. Something like that. Then it's going down, then goes back into another base. Could even draw on, could even stretch that. Now that's a pivot line. Look at that beautiful, beautiful pivot line right here. So the next move up, there's reverse symmetry moves everywhere, guys. You can see one in between these two. So now the next move, silver started breaking down. Actually, this was really scary. Below is sleep mode line right here, my dotted line. So now it's time to zoom in, guys. Broke down, going sideways, lower low, but not a lower low from the 2022 lows. But look what's happening today. Well, we'll have to see if there's going to be follow through here. 1, 2, 3. Top line's valid. 1, 2, 3. Breakdown, confirmed breakdown. Now, is this just simply a back test and silver goes down for the count here? No, not that line. I'm going to use my, either it goes down here like this, or it's a false breakdown and it goes for a reverse symmetry move back to test this breakout line. And if it does, that's step 1. There's many, many steps. And that's why I wrote on Twitter, still a lot of work to do, because that's the work it has to do. It has to go back all the way up here to the descending trend line. And now make this base here, confirm breakout, have those headwinds on that time frame, convert it to tailwinds, and then it could have a run all the way here. Do a reverse symmetry move, right? So now I'm going to zoom out. Look at that. That's a tiny reverse symmetry move, right? And then for it to do reverse symmetry move here. Step 1, step 2, lots of work. And it doesn't mean silver's, if it does that, this performance, the silver price, it should be much higher. Silver has a tendency to be the one that moves this racial chart. If I overlay the silver chart, it's primarily silver moving this chart more than SPX going down. It could be SPX going down also, but it's mostly silver going up. 1, 2, and then look at that. That's another crazy reverse symmetry move. Could probably do a slanted one like that. And that's the final reverse symmetry move before then we enter the real bull era. So now we know this is important. We did not enter a bull era in 2020, no matter how crazy the silver price went all the way to 28, 29. It wasn't enough. You need this, 2, 3, and the bigger the base, just like I said, not all trend lines at the beginning of this video are made equal. The more data is encompassed below it, the more important it is when it breaks out. So this line here, this descending trend line here, once we close above, that will be a bull era-esque type of confirmation where we're above $28, we're outperforming SPX, and all this crazy down move here that it did since 2013, that's going to be the reverse symmetry move. All the way up here. That's probably going to be the move, guys. 2013. Look at that, to the wall. Non-greedy target. That's the roadmap for silver versus SPX, because you always want to be in the best performing asset, guys. And racial charts will tell you which is the best to hold. Look, probably going to do another video about this some other time, but respect those lines. Not all lines are made equal. Don't get trapped, and we're at the very beginning of all this, very beginning. And the party starts after these lines, one by one, they get overcome. That's it, guys. Thanks for watching. Take care, guys. Please subscribe, like, and hit that notification bell. Thanks, guys.